Recovery Report Live. I'm Dan Odess, president of GlobalPro, where we manage risk to recovery, and we've managed more than $1 billion in recovery. I'm coming live to you from the Griffin studio with news and information you can use. As a policyholder, whether it's for your business or community association, you want to tune in every week right here on the Recovery Report Live to listen to us talk about industry important things to deal with. I'm joined by guests on a weekly basis to talk about important issues that are impacting you. Whether you're in Florida, Texas, or anywhere else in the country, this is information that is relevant to you. We're going to talk about claim strategies and many other things that you need to when you're placing insurance or need to be concerned about when buying new businesses, buying new real estate, transacting in any way, dealing with vendors. Whether you're a community association or business owner, these are all important issues. More so today than ever before. Why? Because the insurance market is tough. It's a tough market all the way around. They're attacking consumers. And we're going to get into those gritty details with one of our very own that's joining me here in the studio. Matt, our Senior Vice President, thank you so much for joining us today.
Hey Dan, how are you?
I'm good. I am good. I think we've had an incredible start to the year, to 2023. I'm excited for what the year has in store for us, but I'm concerned for policyholders, particularly in Florida. The session is on the way. We've already seen some anti-consumer bills proposed. Matt, break it down for us, because every week I feel like I'm a broken record. I come onto our show here, I talk about important issues that are impacting policyholders, and I find myself constantly talking about Florida and the legislator and the insurance market and how this shit just does not add up. I'm talking straight because I just don't understand how they've campaigned so hard against consumers, passed all this legislation year after year after year. The pendulum has swung so far in favor of insurance companies, yet we're still in a hard market.
It's an interesting cycle that we're in right now. I mean, it's a kind of a backwards situation, if that's the best way I can describe it. There's really three main things that we're reading in not only in the bills that are being proposed, but in the articles that everybody is where they're describing what's going on right now. And the three things they keep talking about really are, for some reason, the auto market, the insurance auto market. They're talking about prevailing fees and attorneys making money and winning cases against insurance companies. And then they're also talking about the storms and the activity and things that are going on. But when you dig in and you actually look at everything that's actually supporting these three items that they're claiming are causing this hard market, the storm activity, while it's maybe picked up a little bit, over the long run, it's not really out of the ordinary yet. I mean, it has definitely picked up. We've had bigger storms, stronger storms, more powerful storms. But when you look at the balance sheets, when you look at the profit and loss statements, and you actually figure out what they mean by the insurers are having a hard time, it has to do more with the homeowner side of things, and that's where you're also seeing bankruptcies. But if you take all three of those and you extrapolate it again, that has nothing to do, for the most part, with community associations or businesses or any other property and casualty policy that might be out there. But it's spreading throughout the entire industry. Now, what you also don't get is how much of an impact the insurance scheme here in Florida, which is one of 13 states that has a no-fault state on the auto side, what has that done? It's supposed to cut down on litigation, right? But I don't think it has, and I think the stats would show that. And so, what impact is that having on the property casualty insurers, and how many of those parent companies that seem to be making money hand over fist? We're talking double-digit earnings on a quarterly basis. How much of that is impacting them at this point? What you also don't see, unfortunately, right, is a lot of the losses are coming from the rising rate environment we're in, inflation and rising rates. They'll tell you they're having a hard time issuing policies and tell you it's because of the risks, but they won't tell you that they're losing, almost double digits or high single digits on an annual basis right now in their investment portfolios. Yeah, that might make sense. That might be the reason why, but that's pure profit for them. That's pure profit. It has nothing to do with the risk they're taking on, right? So it's backwards in that regard.
But that's what they report to their investors and their shareholders. So when they're reporting less, they got to blame it on something, and it can't be their investment strategy. No, it's not them, right? We got to blame it on some third-party advocates for consumers that hold them responsible, create accountability. Right. And they take this micro issue, make it into a macro marketing campaign, anti-consumer, all across the board, yelling and screaming about this and that, not providing substantive, actual data that truly represents the financial impact. Right now, there's an increased amount of litigation. Well, what does that actually translate into dollars? Like, where are the dollars? Show me the money, right? Show me the money. What are the dollars that we're talking about here? Don't give me the bullshit statistic and everything else. And by the way, study statistics for over 6 years while in college doing a master's in engineering. I could have declared a degree in statistics. And I can tell you right now, the statistics they're using at the legislative level to talk about the need to clamp down on public adjusting and lawyers and fees is total bullshit. It is absolute garbage. And when they were challenged by a ton of testimony by consumer advocates and, get this, insurance company adjusters, the very own people that insurance companies hire to advocate for them to manage their claims, testified for over an hour about all the fraudulent activity going on within insurance companies, to doctor reports, to underpay claims, to deny losses, to do all this stuff. Fell on deaf ears. They passed the bills. They come out of this session going, hey, by the way, you're not going to see any rate increases. We're still in a hard market. Don't worry. I literally, no joke, Matt, I read an article today. I believe it was Property Casualty 360. There was a recent this big conference with all these brilliant insurance minds. And by the way, they talked almost entirely about auto, which is so weird. It barely touched on property insurance. Barely talked on it. But yet such a controversial hard market for property insurance. But what I also found interesting is that they were more interested in the Wienermobile, where the Cadillac Converter got stolen out of it, than they were of anything else. It was literally, I counted it. It was in this one article. It was written 5 times about a Wienermobile. I mean, there is such a distraction from the reality of what is actually going on. There was a follow-up article that I read on commercial property insurance issues, and they actually quoted an attorney that, honestly, I've been doing this for more than a decade, particularly in the Florida market. It's our largest marketplace for GlobalPro historically. Obviously, we've been doing work for policyholders throughout the country and abroad. We have offices in Texas, New York. I've been all over California, you name it, Canada, Central South America. We've done so much work all over the place. And what's funny is that they interviewed an attorney that I've never even heard of in the Florida market, who I'm not even sure does insurance work, and talked about the litigation environment in the commercial insurance. So I'm trying to add this up though, because we primarily do commercial losses, like we handle community associations and business owners. I'm not seeing the correlation between the actual litigation environment and this issue regarding attorney's fees, and whether the litigation environment is actually accounting for the losses that they report on the insurance company side. And also too, you're talking about a lot of surplus lines insurers who they operate under a different set of guidelines and rules in Florida. It was such a misplaced statement and just a very confusing information for anyone that actually knows anything about what they're saying. And again, I just think it feeds into this environment of misinformation, and it sucks because U.S. consumers are being taken advantage of, and in a way that you're blinded by this sense of obligation to insurance companies to give them the opportunity to do the right thing. They campaign so hard, oh, you're giving up a percentage if you hire someone, even though, statistically speaking, you're going to recover hundreds of percentages of more money if you have representation. There's not going to be any real extensive time constraint in it. Fraud within the public adjusting actual industry is very low. FAPIA, Florida Association of Public Insurance Adjusting, go to their website. There is so many different ways that they report issues within their own and police their own industry and report their own issues with insurance companies, as well as with their own with their own professionals, which they have very few to report on. And then the CFO's office for the state of Florida issues a report every so often that includes all the violations. And if you read the violations, it's almost entirely insurance brokers, the very people that are getting paid directly by insurance companies to sell you these products. Now, they're selling you these products for more money than they're ever made, with less coverage. They're making a huge thing. And Matt, you go through this amazing analysis. I want you to kind of walk us through this on how brokers are making more money selling you a lesser product today, and why that renewal really matters more to them right now. And they will basically say anything to get that renewal.
Yeah, it's pretty simple, right? So brokers, just a 30,000-foot overview of how it works to get paid as a broker, right? You place a product, you place insurance for an association in this scenario, and the association has a certain number premium, what's called $1 million. If that premium has risen at the rate, the average rate of increase over the past, let's call it 3 years, so it's pandemic forward, then you've probably, as an association, gone through a couple different, big exponential changes and increases in your premium. So let's say 2-3 years ago that premium was 200, and the broker's making a certain percentage of that 200,000. All of a sudden, 3 years later, for no reason, just because of an inflationary environment, because of a rising rate environment for the past, let's call it 17 months, 16 months, all of a sudden now the premium is $1 million. Well, they're still making the same percentage at 200,000 that they are at $1 million, and all of a sudden across their entire book of business, they're making 5 times the amount of commission they were making previously for nothing. They didn't increase the volume of clients, they didn't increase the volume of policies. The premium simply went up. And so, when you think about it from that standpoint, like who's actually representing you? And taking it one step further, when you have loss or damage, who is really representing you at that point? Because every time we speak to an association, the biggest complaint they have is, well, my broker told me that my renewal's coming up and my premium's going to rise if I have a claim. Well, let's take a step back. So you pay 5 times more on average right now, as over the past 3.5 years, for a premium that you can't, or a policy that you can't use.
Yeah. Or you should be afraid to use.
Or should be afraid to use.
Yes.
So your broker, who is now making, again on average, 5 times more today for a policy that didn't change other than decreasing the coverage that you have on certain limits of liability, right? And all of a sudden you have to be afraid and you can't use it. What's the point of paying for insurance if you can't use it?
You're paying twice,
and
right?
I'm not talking pipe breaks and things that may occur, over time, right? I'm talking, we had multiple hurricanes last year. One was a Category 4. It might be one of the biggest hurricanes ever when it's all said and done and all the NOAA information data comes through, and we might see an upgrade here, just like we did Hurricane Michael. We had one a month later, right behind it. Before that, we had a very active season, tropical storms all over the place. And now all of a sudden you can't use your insurance to recover. What's the point? What's the point of paying for it, right? But the brokers will tell you, right? Again, they're making 4 and 5 times the amount of money in production, they call it, or commission. Today, you're getting less coverage, you're paying more, and their answer to you as your representative, as your advocate is, don't use it? That makes 0 sense. What are you paying for?
It's like they rolled out the cumulative deductibles. We really saw them come on strong after Hurricane Wilma back to 2005. There's this idea that you have a loss and then there's you have one hurricane, you have another hurricane right behind it, like we saw with Ian, then Nicole. This was Katrina, then Wilma, and there was a lot of controversy over which loss did it apply to. And at the time, you didn't have a lot of cumulative deductibles. You had individual deductibles per occurrence, per hurricane. And you had properties that got hit twice. So, and it was a question as to if I made a claim at a Katrina, then Wilma hit thereafter, is it still a Katrina claim because I had already put in for my roof replacement, now there's more damage to my roof, do I split it between the two, do I have 2 deductibles? So you saw a lot of community associations move to these cumulative deductibles, but then you have this massive campaign by these brokers to not report your claim. Again, if you don't report your claim, you're always starting at 0. But if you do report your claim and you do a good job of determining the amount of your damages for each instance, then there possibly an opportunity for you to recover. Now, you need to go out and assess all the damage to your property anyways as a fiduciary to your association. You have an obligation to go do this stuff anyways, and you need to put it all together. But if you don't know what you're looking for because you don't have a coverage expert looking at your policy to seeing what could be claimed or what shouldn't be claimed, and you don't have someone actually coming through your building, and it's very expensive to hire experts to look and investigate these things, and I have someone like GlobalPro there doing these analysis for you, and the legislature passed all these laws to disincentivize anyone from helping you, public adjusters, lawyers, things like that, then you're on your own. And you have bought into this idea that it's because of your actions as a consumer that the insurance companies, the trillion-dollar profitable, billion-dollar profitable companies are somehow worse off if you do anything bad on you, consumer. It makes no sense. They attack you, but without you, they don't have the $1 trillion as an industry or $1 billion as companies to reinvest and make the profits to pay their shareholders the dividends, that do all these things, right? So, but they attack you as consumers and attack the advocates that are licensed, heavily regulated. I would challenge, I mean it, and I hope someone writes into us and provides me, challenges you to find another industry outside of public adjusting that is more regulated in the state of Florida or Texas. Find me another, honestly, I want to know, because here's the thing. We have the Department of Insurance, you have the administrative code, you have common law, you have case law issues, you have so much laws and rules and guidelines and all these things. I mean, everything down to our contracts, to the marketing, to the way in which you can transact insurance, to your right to rescind the contracts, meaning you can, one of the proposed bills, you're going to hear about this, House Bill 1158, which is basically if there's a hurricane and you want an insurance company advocate, and you want an insurance advocate, right, to represent your interest, you, as a consumer, you'll have 30 days to rescind that contract. And then that public adjuster that's supposed to be there on behalf of you has 45 days to complete their estimate. But you got to ask yourself something. If I know that you can cancel a contract within 30 days of signing it, 30 days within signing it, and you just suffered a massive loss, and I have people calling me like crazy, right? I'm the public adjuster, right? People calling me like crazy. And you have 30 days to cancel that contract. Who would work for free? Who would work for free? Right now it's 10 days, which is, to me, is asinine and totally ridiculous. But 30 days, and then 45 days to finish an estimate. We have claims that are tens of millions of dollars. We're reconstructing these properties from the ground up that have been totally devastated by hurricanes. We have insurance companies that we have clients of ours that we represented that have sued insurance companies a year and a half, 2 years later, only to find out that the insurance company has yet to even finish an estimate or evaluation or done much of anything. And they're expecting an industry that they have strictly restricted their fees, capped their fees, substantially capped their fees, restricted the way in which we can compensate people that help us or help you as consumers. They've made it really complicated to actually market those services. They make it incredibly difficult to have a partnership with you, 30 days to rescind a contract. And you're supposed to help you get an evaluation done in 45 days. And it's all under this guise of the fact that these are the things that are hurting insurance companies. I mean, Matt and I talked about attorney's fees, right?
What does that have to do with prevailing fees? If an attorney files suit for an insured and they win the case, what does that have to do with everything you just described? Literally nothing, right? Why compel?
One step back though. You won the case, prevailing party fees, right? Prevailing, meaning you won. Yes. You proved that the insurance company did something wrong. Now you're going to be awarded attorney's fees to pay for your lawyer. What did you do wrong in that scenario? But that's the cost driver for insurance rates. By the way, same company's reporting billions of dollars in profits. Okay.
Double-digit earnings growth.
Yes. Yeah. Double-digit.
But yes, that's the first part of it. But the second, I mean, why compel them to get to suit? Why don't you adjust the claim properly and pay the claim? I mean, I don't understand. If you're worried about the prevailing party fees, or having to pay damages and fees because you lose the case, why don't you just pay the claim? Wouldn't that? I mean, that would probably cut a large percentage of your losses as they claim. I mean, I don't know. It's simple math. But with that being said, I think the other thing that is really important here, again, going back to what I said, the impact of the auto market. How much? Nobody will give any data. I haven't seen any data.
Well, it's just like the property insurance last year when they were supposed to report on the actual cost of this litigation, and then they said, "Oh no," they punted. They said, "Oh, we don't owe you that until next year." And here we are next year. And honestly, I've been looking and digging, and I've called different organizations, and no one has it still. So they're just, again, let's demand accountability. Let's demand that they publish these financials. I think it's been a great talk, Matt. I think there's a lot to unpack here. The reason why we're talking a lot about this stuff is because Texas and Florida headed into session. Texas is every other year. We happen to be in that year. It just so happens to fall in the same year that we were having some of the cleanup legislation, I will call it, 4D, 2D. You had a condominium associations. We're very much involved in COMC. We've had that incredible team with CMC on here, several broadcasts. We're talking with them daily. We're trying to figure out what to expect on the association side, but also how are these insurance changes going to change. One of them is calling it a glitch bill, where they're trying to actually now fix some of the issues in there. Just again, the legislature rarely gets it right the first time. I'm not saying that, and I love you legislators and everything else, and I help with campaigns, and I think it's right, but it's very difficult to do what they do. Let's give them credit where it's deserved. One of the things that came out of there is that if they were to try to do all of the inspections that were required of the associations to ensure that the buildings comply with these recertifications, they would never be able to get it done if every single engineer in the entire state of Florida was hands on deck doing inspections every single day. It would have never gotten done. So they're going to fix those things. Again, I think some of that stuff was necessary. I think a lot of changes need to occur to make it make sense. And I hope to hell that the legislator figures out how to make sense of the insurance environment. Sadly, the first thing I read is the Senate bill, House bill, I believe it is, House Bill 1158. I mean, just couldn't be any more to consumer. There's all kinds of other stuff in there. By the way, I picked on the issue regarding public adjusting, but I can tell you that I've spoken to or read some information about other industries that are being impacted by that proposed bill, and they also think it's ridiculous, some of those things that are in there. Even some of the insurance company representatives think stuff is ridiculous. I don't know that bill is going to make it, but it is been drafted, it has been submitted for consideration, discussion. It's got to go to the House and Banking Committee to get some support. We don't know if there's going to be a sister bill to it over in the Senate. So there's a lot that needs to go on. There's a lot that needs to, if you don't understand the how a bill becomes a law process, there's a great little Google it on YouTube. I recommend you check it out. But what's important here, big takeaway, be on the lookout for misinformation about what's going on, whether it's in Texas or in Florida right now. A lot of eyes are on what's going on in those two states. They tend to be bellwether states, particularly Florida, for a lot of insurance reform that we do see in various other states. Usually some form or fashion of what goes on here kind of bleeds into other states and legislation. So let's continue to monitor it. We're going to continue reporting on it. We're going to issue memos, add it into our Claims Advocate newsletters, et cetera, et cetera. We're going to make sure that you have all the information you need and can use. So tune in every single week right here on the Recovery Report Live. I really enjoyed having you, Matt, on. Thanks so much.
Thanks for having me.
Yeah.
Awesome.
We'll have to keep doing this, man. Yeah. I mean, you got a way better pocket square than me. Mine's missing, but I need to maybe up my game a little bit.
Today is purple. Let's see.
Today's okay. I like that.
Is.
I like that. Well, I'm all blue over here. I got blue jeans, blue jacket, and blue shirt on. Feeling that GlobalPro pride. Thank you all for tuning in this week on the Recovery Report Live. We'll see you next week right here, same time, same place.